All right, here we have a case study on NFP. And I'm not gonna lie, NFP is one of those days that I kind of like to look at. And I kind of like to study, and anytime I've studied NFP, or I don't want to say anytime, but a lot of the times NFP will actually be pretty clean, and it actually is pretty tradable. So we're just gonna go over this, and this is gonna be a case study. So as you see on the daily chart, what do we have? We put in a swing high here. We've traded lower, and now what are we doing? We're trading back into this daily down close candle. Look at this big beefy down close candle, and also into this volume imbalance right here. So that's what we're trading into. If we hop into the 15-minute time frame and put on this indicator, what are we doing? We're trading lower below previous day low and below these lows. We barely purchased these lows right there. So we're trading below previous day low into that new week opening gap. And then what do we see? We expand higher. This is NFP. NFP releases. It just expands lower. No wick on that candle. That's a news high. It's going to be a high probability draw on liquidity. Then we trade up into this 15-minute SIBI. Where are we at? If we look at this total range, Asia trades lower, comes back to that new day opening gap as fair value, and then we're trading lower. We're expanding lower. Where are we? We're within a discount. Smart money is going to be accumulating longs, and that's what we do here. Smart money's accumulating this. We're offloading some here. Then we're trading lower. Look at that. New week opening gap. Constant encroachment to the tick. Absolutely beautiful. Like that is perfect. Very nice delivery there. Then what do we get? We get expansion, retracement, expansion. We have a 15-minute BISI right here. We're trading higher. All these wicks act as a balanced price range. We don't trade below that. We trade higher up into new week opening gap. Notice how we're not trading to this high. We're trading into new week opening gap. And just like a weekly TGIF, what do we get? We get a retracement back to the daily range. I don't like looking at that sort of profile, to be honest. I feel like it's anytime I look for TGIF, it's just me trying to force it. Not saying it doesn't work, and not saying it's not a good concept. Just me personally, it just doesn't resonate with me. And we trade back within this range into internal range liquidity, into this imbalance right here, and also around cost of encroachment of that wick. So that's what we're doing here. Let's drop down to the 5-second chart, and then we'll drop into the 1-minute chart with annotations. So here, 8:30, we just expand lower. We have 5-minute gap here, trading higher, buy side. We come lower, expansion, and then kind of just that whole business. So let's drop in the 1-minute chart with some annotations here. Now, a lot of these things are a little bit more important. All these orange boxes are volume imbalances on the daily chart. So here, 8:30, we distribute lower. So right now, we distribute lower. And then what we get here, displacement, we get a SIBI, as well as a previous new day opening gap. That gets traded into. Then what we see, we distribute lower. So now we're in a deep discount. It's 9 o'clock right here. So we're in a deep discount. We might want to wait for 9:30. Anytime NFP, probably wait for 9:30. What do? We take buy side liquidity. Then we trade lower. We're trading into a 5-minute BISI right here. Also into that new week opening gap. Constant encroachment. And notice how we've had fair value gap in, fair value gap out. What is this? This is now a balanced price range. I want this BISI to hold, specifically this 1-minute BISI right there. That's exactly what we hold here. Constant encroachment's holding. Then what do we get here? Once we trade above that candle here with the wick, that's a change of state delivery. This is getting respected. New week opening gap. And then what do we see? We see expansion. Expansion occurs. And what do we see? We get a retracement back down into this BISI on the 1-minute. What time is this occurring? 9:50 macro. Where are we trading to? A new day opening gap is now used as a discount array. What do we see? We see another expansion. We see this wick right here. Or so we see that gap right there. That fair value gap right there. And I want to grade this wick actually. This constant encroachment we're respecting. Then we're trading higher up into that news high right there. And then what do? We come back down. What is this? Redelivered rebalance. Right there. This is getting respected. And what are we doing? We're trading higher up into a daily volume balance and also opening range gap. 75% of that is what we aim for. And let me pull that up here. We're opening up into a big opening range gap low. So that also supports a narrative of possibly seeing higher prices to see this get traded into within the first 30 minutes. Look at the respect to that right there. And once we've taken that buy side right there, we trade into that 15-minute SIBI. What do we see here? We see shift in market structure. This low gets broken through. Was that institutional ortho entry drill? Notice how we trade right to that. This inversion is holding price, keeping it at bay. And then where are we trading lower into this new day opening gap and also into here. What is this? SIBI right there, SIBI right there. And then what do we have? We have a Mohawk here to these wicks. What does that now become? This is a balanced price range. The wicks, we trade lower. SIBI, cost of encroachment. Little tiny inefficiency there. Trade into that. Also this inversion level. Also into this up close candle here. Boom. All that happens, we trade lower. Now, what are we looking for? Look at that signature right there. Cost of encroachment perfectly respected. Not only do we trade at that for just one candle. Notice how we just traded for it at one candle. We're not marking time here. We're trading at one candle and then boom, we're rejecting that, displacing higher market structure shift with an imbalance here. Notice how we have a volume imbalance there. We trade lower, BISI, down close candles. What is this? Order block, change of state delivery. Where do we trade right to? This down close candle, that open, sensitive with this gap. Boom, expansion, breakaway. This doesn't even get traded into. Now we're trading above this new day opening gap. We've had a fair value gap in. We had a fair value gap out. BISI on the 1 minute acts as support here. And now what time are we also within? Oh, and also, what time do we spool towards this new week opening gap? During that 10:50 macro. Now it's approaching lunch hour, lunch macro. Lunch hour is 11. It's pretty much 2 hours. That's how I delineate it. 11:30 to 1:30, the whole 2 hours. What do we see? We see kind of consolidation here, and notice what we do. We actually end up leaving smooth relative equal lows. So if I were to be watching this happen, if I were to watch this happen, I'm not gonna lie, I would look to see manipulation into these lows before then possibly trading higher. But notice how we never get that. We trade higher. This breaker gets respected, and I would have liked to see that. So this in my opinion is a little bit lower probability, probably a little more hindsight, but that's what we want to see. We want to study when price leaves things that might not be as comfortable, and that's the whole point of backtesting, seeing what price actually does and getting comfortable with seeing it happen. Now what do we trade above? This breaker gets supported. Also, what else do we have? We have these wicks. They act as a balanced price range. We're trading higher, inefficiency, drag that out, trade higher, inefficiency, respected, and now we're just repricing higher to where? A new day opening gap. And notice as well, we have that new day opening gap and true day open exists above here. Now what are we entering here? 1:30 ends, we're entering PM session. So for a PM session, I'm kind of looking for to see some form of stop rate before then continuing in a direction or something like that. What do we get? 1:30, we're waiting, and what do we get? Boom, stop point right here, in that 2 p.m. silver bullet hour. Then what do we get? Shift in market structure, imbalance. 2022 model right there. We're trading higher. These series of down close candles are being respected. This is being respected. What is this? Propulsion block right there. We're trading lower. Sell stops are accumulated. And look at the bodies. The wicks are coloring outside of the lines here of that new day opening gap. And then we are trading higher. We're expanding from that fair value gap. Looking for new day opening gap. Cost of encroachment gets hit. We're coloring outside of that new day opening gap on the 1 minute. And now what are we approaching? 3:15. Notice how 250 macro spools us towards that new day opening gap as well. 250 macro, very nice price run right there. And then 3:15 is the next macro. What do we get? Sell stops are induced first. We trade lower. Sell stops flood the market. Then buy stops flood the market. What do we have here? Inversion is being respected here. Then what do we get right here? Immediate rebalance. I want to make sure this is like to the tick. Immediate rebalance right there. We're trading lower. We're leaving a breakaway gap. That's what we want to see. Then what do we get here? Another immediate rebalance. We trade a little bit higher. And what do we see? Expansion lower. SIBI on the 1 minute. We're trading lower. Up close candle. Wick, constant encroachment. And we're retracing back 20 to 30% of that range. This red line is 20% of the daily range so far, and then this is 30%. Notice as well we're trading within that 15-minute BISI right there, and then we're also trading with these volume imbalances. So that's very nice to see. I want to go out to the daily chart as well just to look at this one more time. Monday, we get an open, then a Judas, and then we close back to where that, or we don't close back, but we trade back to that new week opening gap. We kind of just see a consolidation week. We're not in a trending model. We refer back to that new week opening gap. And I also want to recognize that the fact that it's a Friday. So notice how new week or this final hour trading is a little bit more animated. There's a lot more, or not a lot more, but it's more than I would say usual is on a Friday, because you got to think about long-term position traders, things that people that are trading for longer periods of time, swing trading, maybe position traders might want to be covering their positions during that Friday, and that's what entices this volatility. Anyways, that's all I got for this case study. Hopefully you all have a good one, and I will see you in the next one. Peace out.